Greetings, welcome to Community Bank News. My name is Tom Bengtson. I'm publisher of Bank Beat magazine. I am with Sam Wilmes. He is the editor of our website, banknews.com. Sam, what have you been working on in the last week?
Well, last week posted my feature story for our November edition on bank names. Really cool. A lot of banks are doing something different with their name. For example, here in Bloomington, EntreBank, it's a portmanteau of the word entrepreneur and bank. And then a number of other examples, Verimour Bank in Missouri, Bank in Iowa, and numerous others that I covered.
It's kind of fun, right? Because banks used to always be First State Bank of or First National Bank of, and I think what we're seeing, of course, is a movement away from geographical references in the name. Isn't that right?
Correct. Yeah, there are hundreds that have geographic references, and I think as consolidation happens, more banks are trying to stand out to survive.
Sure, and of course the internet is kind of making the traditional geographic boundaries less meaningful, so of course that's kind of a reflection there.
Yeah, and also there was another bank M&A announcement last week. Indiana's First Financial Corporation is expanding in the Nashville area, and so that was big news there in Indiana. They're expanding down there. And then also consumer sentiment fell 6% this month, according to the University of Michigan. That's due to the ongoing government shutdown, which actually the Senate over the weekend reached a bipartisan agreement. So that's welcome news.
Looks like we're going to get some resolution there. That's great. And I know I had fun last week where I was digging into deposit insurance reform. That issue is back on the table. There is some appetite to look at that. There is a bill being considered which would raise the deposit insurance coverage ceiling to as much as $10 million, which some people think is necessary, others think it's too high. There's always the question of moral hazard. The higher the coverage level is, the less incentive there is for the market to pay attention to what the banks are doing that are holding those deposits. A lot of arguments both ways about whether moral hazard is still a relevant issue. I know a lot of people think that even though coverage is limited to $250,000 per account now, that is sufficient given the reciprocal arrangements there are to keep higher levels of deposits protected. And there are other ways to protect municipal deposits and so forth. So a lot of debate about whether higher levels of coverage are needed. I think everybody would like to see more deposits covered. Nobody likes to see a run on a bank. That's not a good thing. But obviously additional coverage costs money. And there might be other ways to accomplish that same goal without kind of opening yourself up to potential additional regulation.
Yes, and I think if the government is going to guarantee the deposits, they must ensure that the large banks do not have a disproportionate advantage to the smaller banks.
Well, that's true. So you're talking about getting rid of too big to fail, which I think every small bank wants, every community bank wants that, and Dodd-Frank was kind of supposed to do that. Obviously, that hasn't happened. So that's part of what's igniting this conversation about deposit insurance reform. So very interesting topic, very important, I think, to our readers. We will be following this closely, and we'll see where it goes. Sam, anything else?
No, that covers it for me this week. Thanks for tuning in.
All right, thank you.